Welcome to the first video in the reality check series. So in this series we're going to be taking a look at the Malaysian economy, and we'll be starting by looking at inflation, and then there's GDP, income tax, household income, how the stock exchange is doing. We're going to be looking at the EPF fund, the pension fund. We're also going to be looking at the house property index, and finally CPI. But everything relates back to inflation, so let's start there. So to begin with, what you need to know is that inflation basically relates to the money supply, the amount of ringgit that is in circulation at any given point. So what we want to find out is basically for each year how many ringgits are in circulation, and then we want to compare it to the previous years, and then we can make a percentage of the increase and see basically what the inflation is. So the data that we need for this comes from basically the central bank, the Bank Negara website, and I have the link here. So let me just click on that. So here you can see it's the Bank Negara Malaysia website, and we're going to be looking at the annual report. All the annual reports back in time are available here, but I'll be looking at the annual report from 2012 just to show you sort of where to get the data. So you want to be scrolled down, and you want to be going to Appendix 25, Money Supply Annual Change and Growth Rate. That's PDF. So if you click on that, you'll be getting basically a one-pager that shows how many new ringgits were put into circulation in 2012. And the number that is of interest to us is the one called M3. M3 is the broadest measurement of currency, basically. So that includes everything that the government prints and everything that private banks and credit cards and that kind of stuff prints. So we'll be taking this number, in this case 109,358. That's basically 109 billion ringgit was created in 2012. And then we take it back to the spreadsheet, and so here are all the numbers from all the annual reports that are put in. So you have the years here on the one hand, and then on the other hand you have the different reports, basically. So in the 99 report, for example, we have numbers for 95, 96, 97, 98, and 99. So each report basically has 5 years, 4 years back plus the one that the annual report is covering. So if we put all the numbers into here, we'll see basically how much ringgit is being printed every year. And then at the end, we can see, I'll basically have a column here that says what the annual growth is for that year. So you have 25 billion over here, and you have the 109 billion over here that I just showed you. So there is a bit of a funny thing going on here, because the numbers actually don't really add up. So for example here, you can see that the annual change for 2001, in 2001 it was reported as 12,988, but then the next year it's reported a bit differently. So it's kind of hard to know why that is, and these kind of changes happen quite often. Here, for example, you have 61 billion, 0.018, and then you have 0.102 in the middle, and then 0.101. So it's kind of hard to know which number is actually the correct one. So what I've done is I've taken the last reported number for any year, and I've used that as the annual change. So when we do that, we can create the total currency supply for each year. So we start with 159 billion, and then we simply add on. We take the previous year and we add on the change, and if we do that for every year, at the end we come up with 1.3 trillion. So it's 1.3 trillion ringgit in circulation right now. So it's kind of interesting to see what this means, because as I've written here, currency supply increased by 822%. So that's a whole lot of new ringgit being created during this kind of short time period. I mean, you have to realize that before 1993, so from the beginning of the ringgit until 1993, only 159 billion was created. And then during this short period, it's like 20 years, we have another staggering 822% added to that. It's a massive, massive increase. So if we take this and we plot it, you basically get this graph. So here we can see that in 93 it starts at about 200 billion, and then it goes up, 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 up until 2012, almost in a straight line. So the currency supply here in 99 has doubled compared to 93, and then of course here in 2007 it has doubled compared to 99. So it's starting to double pretty fast. So this is the basic number that we want to be looking at. So with this, we can now calculate the inflation straight off. It's very, very simple actually. So what we do is that we're going to start with 2000, and we're going to say that this is the baseline that we'll be calculating else from. So we say that at 1 ringgit in 2000 has the value of 1 ringgit, and then as we print more and more ringgits, basically the value of each ringgit goes down. So we'll be comparing ringgits in subsequent years with the 2000 ringgit, basically. So here you can see what the inflation is, 5.51%, 3%, 7%, and so on. Some years are really high, like 2006 had a super high inflation. There were lots of ringgits being printed. And then here you can see the value going down. So starting from 1, it goes down all the way to 0.3. So basically this means that if you have the 1 ringgit from 2000 and you sort of put it away, and then you take it back in 2012 and you look at it compared to everything else, because of all the ringgit that has been created in that time period, it's now basically worth only 32 cents. So it's lost 68% of its value in only 10 years. That's quite staggering. And I have a graph of it here, basically. So that's basically how you calculate inflation when it comes to the currency supply. And so this number of the value of the 1 ringgit, and as it deteriorates towards 2012, this is the key value that we'll be using for everything else as we do inflation adjustments. So basically, if we have any number for a ringgit number in 2012, we're going to be taking that and taking it times 0.32, and then we will have the actual value as if it was in the original 2000 value, because then we can compare prices and values in 2000 with prices and values in 2012 by doing this inflation adjustment. So that's good. So the next thing I want to show you is the ringgit and US dollar exchange rate, and why that's important you'll see quite soon. So I've just taken the data from Bank Negara again, and this shows for each year what is the exchange rate with the US dollar. And yes, you can see for the first couple of years it's pegged basically on the 3.8 level. But then as it gets unpegged, it goes down. So the ringgit becomes stronger basically compared to the dollar. So what are we going to do with that? Right, so here is where it gets interesting. So I've also put in the US dollar versus gold exchange rate, and the reason I'm calling it exchange rate and not price is because gold technically is money. Historically, for the past thousands of years, we have used gold as money, so I'm going to call it an exchange rate, the ratio between the two. And I've gotten the exchange rate from measuringworth.com from 2000 until 2012. So when we have this exchange rate and we also have the ringgit to USD exchange rate, what we can do is that we can find out what the exchange rate is between the ringgit and gold for this period. And we can see the annual change of this exchange rate basically. So we can see here that for each year you need more and more ringgit basically to get the goal. And if you graph it, it looks something like this. And that's great, but the number I'm actually interested in is the inverse, meaning if you have 1 ringgit, how much gold can you get? And how does that change over time? So I'm going to take these numbers and going to take basically 1 divided by it. Because then I get the amount of gold that I get per ringgit. And as you can see, the amount of gold you can get per ringgit is going down over time. Basically, this is an inverse of the currency supply that we saw at the top. And this makes perfect sense, because as we are printing more ringgit, and as I said, inflation causes the value of the existing ringgit to go down, the amount of gold that you can buy with 1 ringgit goes down at the same time. So it's important when you see these so-called gold prices and you see that, oh, it's going up, it's going up. It's actually not going up at all. What's happening is that the value of the ringgit is going down and the gold is fairly stable. It doesn't really move much at all. It's just that the value of the dollar and the value of the ringgit is going down as more and more of them are printed. So if we compare the ringgit Malaysia, which is a fiat currency issued by the Malaysian government, the Malaysian state, if we compare it to money, which is gold, you can see that in terms of value it has lost tremendously over the past 10 years. So these are the basic numbers that we need to have with us as we look into everything else basically. So we have the price of or the exchange rate of gold towards the ringgit, and we also have the value of 1 ringgit in 2000 and as compared to all the other years, which we can use for the inflation adjustment. So that's about it for now, and I'll see you in the next video.